RS Software is the company that has actually delivered its numbers. It has posted a loss this time around as well of 3.6 crore rupees, and the income as well has dipped by about 2.2%. But to understand the internals of the company and what the company has done during the quarter, we are joined by Raj Jain. He's the CMD of the company. He's joining us on Hot Stocks right now. Hi, Mr. Jain. Good morning. Thank you so much for joining us on ETNOW. Now, Q4 has been a bit subdued on a sequential basis. There's been a mild decline in the revenue, I think mostly due to the domestic side. And the operating loss, however, continues to stick out like a sore thumb. Now, we understand that you're in a multi-step transformation phase, but I think it's turning out to be more painful than anticipated. What's your view?
Good morning. Thank you so much for having me on your channel. And I appreciate your comments. We definitely believe that we are very much in line with our strategy transition, and I'll explain that to you over the next couple of minutes. We are making consistent and good performance. As a matter of fact, for the past 9 months, we have been seeing consistent growth for the company, and this quarter has also seen a growth on a quarter-on-quarter basis. So when you look at our operational losses, they're actually very minimal because bulk of our operational losses are actually investment, which I'll explain to you in a couple of minutes. Now, when we look at the fact that this is our first year of the transition away from one dominant client, and therefore the revenue transition that's taken place, we believe operational losses being minimal is a significant achievement and a validation of our strategic financial cost management strategy. We've added 17 new clients during the year, and we have successfully achieved our geography expansion as well to India, which is once again another risk mitigation factor. We've had continued growth in revenues, as I mentioned to you, and in our new clients, we've actually achieved 120% growth over the past 12 months. And therefore, if I look at from the July 2016 to March 2017 period, we've actually had a 30% reduction in our net losses. Now, talking about investments, 70% plus of our investments are in building new assets. What are these assets? These are the ones which are preparing us to go after the large growth opportunity especially in countries like India for digital payments. As everyday media is reporting that led by Prime Minister himself, the government is really pushing for the growth of digital payments adoption and has even brought out fiscal and monetary incentives for the same. And we are well prepared to ride on this wave. And by the way, we believe that the major growth of 10 times by 2020 will ride on two major platforms, where one is UPI, Unified Payment Interface, based on which the BHIM application has been built, and the second is the BBPS, or the Bharat Bill Payment. And both these products and platforms have been built by our software.
Okay.
So
allow me to come in here, sir, because I want to talk about the fiscal. Your top line has reduced by 74%, and that drop is entirely from the US. Even though it is a conscious strategy, the rest of the world has also not seen any growth. That's quite drastic. When can we, did you expect this kind of a situation? When can we see things improving, particularly from the US region?
Well, number one, we definitely expected this situation, and we were very clear, in fact, on your channel at the start of this fiscal, that what we have taken a conscious strategy is to move away from our one dominant client. That 74 reduction, actually even more than that, is because of moving away from the dominant client. On our new clients, we've actually grown 120% for the last 12 months, and our future strategy is all on the new clients and on the products and platforms where we are investing significantly. And if you notice further, our cash reserves are significantly high on our balance sheet even 1 year later after transition. And this is our ammunition to go after the market opportunity in India. In fact, during this year, you're going to be seeing launch of our products and platforms in the country. So we are very clear that we are moving steadily and at an accelerated pace in the recent past by looking at our investments towards the transition strategy. We look at 17-18 in a very positive way for us, where we believe that our decision to expand our geographies, our decision to add new clients, our decision to add products and platforms.
Mr. Jain, unfortunately we're a bit short on time, and I want to be able to, cover more topics actually with you. Yes, you did speak about geographical expansion. We'll come to that as well in a bit. But, before we talk a bit more on that, I wanted to talk to you also about your operating profit picture, because that's something that's dented sentiment with 35 odd crore rupees in the red. So based on the strategy execution and of course all of the other product launches that you are focusing on, where do we see this stabilizing? And yes, you did say that you're looking forward to FY18. So can we expect improvement in FY18?
Most definitely.
Okay.
And like I said, we are already an improvement trend. If your analyst community and your viewers were to see our quarter-on-quarter performance for the last 3 quarters, they will find that to be true. We see this incrementally every quarter as we move forward. So FY18, we are absolutely clear that we're marching onto our strategy transition. You will see the launch of our product and platforms. You will see the growth in the US market happening. You will see the growth in the other markets happening for us. So we are on what we call on our growth strategy, which is on one hand taking care of the major risk mitigations, and on the other hand going after the major fintech opportunity across the globe.
Okay, let's you go on that note. All the very best for the coming quarters. Thanks for giving us a sense of how things have really shaped up. So not entirely surprised by the kind of weakness that was witnessed in the US, but going forward, there is good growth in new clients, and they have managed to reduce their net losses in the last 8 months.